Hey everybody, good morning. Morning, Larry Everett. Infinity, man, you're not coming in first lately. Craig, Rex, Wade, Sergio, David, Donald, Kevin, Ed, Eric, Valerie, Francois, Bob, Jan, Lieutenant Colonel Goose, Ted, Indy, Greg, Gregory, sorry, Laura, Al, Terrence, Marianne, Dan, Darren, Keith. Good morning, everybody. And if you want to chat with me like all the fine folks saying, hey, good morning, click the button over here. Be a subscriber on the channel. There's Rongimer coming in. Gutting a Tesla this week. Hopefully you got it back together. And Alan, good morning. So, raise your hand if you've heard or seen the media talking about the $6 trillion on the sideline and why it would lead, that money flowing in the market is going to support this bull market going even higher. I've even seen some copy people jumping in on it. Trying to use that as an explanation for why you should buy their product. Just complete bullshit. And guess what? I found some numbers. I've seen it for a couple weeks. People talk about the $6 trillion in money markets sitting there on the sidelines. And I started diving in. I was like, I need to figure out where this money is, what this money is, and why people aren't putting it to use. I mean, we're at new all-time highs. Why would you not deploy the cash? So, the truth of the matter is that it is deployed. And here we go. So, all-time, this is all money market funds totaled, hitting a new high, and this is in millions of thousands of dollars or whatever. So we're talking about $6 trillion. Making a new high, squeaking it on up. We've been at 6 trillion for a little while. We just bumped it on up, even higher. Now, where is that money? What exactly? Whose money is that? Where is it invested? What is a money market, right? Money markets are, treasuries and interest rates and all that kind of things. All right. Now, here's who has the money and what type of money market it is. This goes all the way back to 2011, right here. Check this out. Currently, what's the big blue bar? If you look at the big blue bar, that's government with no fees and gates. The biggest blue bar. So most of the money, that's from just over 1 trillion up to just under 6 trillion. So 4.5, almost 5 trillion of that is tied up in government money markets with no fees and gates. All right. The little yellow right there, prime retail money markets. That's me and you. That's, essentially regular people. So really, if you want to consider money on the sidelines that could be moved over and invested in the stock market, might be that little yellow. Now, it actually might be that it's smart to keep some of your money sitting in money markets where you can quickly deploy that cash when you need it. So, as you can see, as wealth has grown, we go through fits and bumps and humps right there. And that's probably where we're going to stay, in that general vicinity. As the money supply grows, that number will grow a little bit, but it only represents a small portion of the wealth invested in the markets, and it kind of needs to be about that size. So that's not really money on the sideline that's going to be deployed. And then we have prime institution money, and look how constant that's been. Just hanging. So it's about the same situation. So that's institutional money and that's retail money. And I think we're pretty much fully deployed. So this farce of money sitting on the sidelines is all coming out of this giant government bullcrap thing right there. So, gates and fees, we can get into that later, Chris. That's beyond what I was going to talk about here. Now, the other thing coming to a head here, we've got just a few days left, 3 days, in fact. The Fed emergency term Lending facility still hanging out at the highs. Now, these are 12-month loans. So these are going to, the ones that were written 12 months ago are going to bleed off, but no new lending. This is, again, millions of thousands. So we're talking about $164 billion in loans to emergency loans to banks right here. Now, the Fed wants to, as Jerome Powell yesterday was testifying in front of the Senate, he wanted to, what was he put it? I got to look at the quote right here. Destigmatize the discount window. So here's the thing, though. When you borrow from this closed term bank funding program, which closed term ends in 3 days, you don't have to disclose it. When you borrow from the discount window, you have to go tell everybody you borrowed from the discount window. And this thing was only available for 12 months, and now it's fully cooked. We're at the end, and I don't know how you destigmatize borrowing from the discount window when you have to tell everybody that you borrowed from the discount window, and it gets published that you borrowed from the discount window. We don't know. This was kept basically secret, whereas the discount window is very public and open. So it's not the same thing at all. Not even a little bit. So interesting, but I don't know how he can destigmatize it and keep everything open and honest. This thing right here was very much not open and honest. And so there's $164 billion loaned out to banks to keep them solvent. And the window for borrowing more of that is closing, and they're going to have to start paying it back. These were only 12-month loans. You can see we ramped them up right there in December and January as we were coming to the end. I don't know. This banking problem is we kicked the can down the road, essentially. That's what I would say. We've kicked this can down the road, and over the next 12 months, as all this money gets paid back, we'll see what happens. So we may have prolonged the next financial crisis until after the election. We'll see what happens here. This money right here is going to come due by next month, though. That big chunk right there. Almost, what is that, about $80 billion? That initial ramp that we had last year, this time. They set this baby up, lent it out. That money's got to come from somewhere. All right, that's why it's circled in red. It's a problem. We could see some banking instability in the next 30 to 60 days, and then the rest of this money's got to get paid back over the next year. So, what does it mean? It means maybe we see some more banking freakouts. Maybe we get some volatility in the market. For the love of everything, I hope we get some volatility in the market. So I brought that today. I wanted to share it. The myth. Don't let anybody convince you that there is $6 trillion sitting on the sidelines. All right. We see it right here. It's not really investable in the market. Now, the other farce of this whole thing is that the way the market works, for every buyer, there is a seller. For every seller, there's a buyer. If that $6 trillion were to come in and buy, that frees up $6 trillion from a seller. All right. Then where does that money go? So money just moves. It's not really sidelined and come back in. It's not like a pool where everybody jumps out of the pool and the pool's still the pool. No, like prices in the market. If everybody jumps out of the pool, the level in the pool drops drastically. So that's why we have pullbacks. That's essentially when ebb and flow of money into and out of the market causes the market to go up and down. Pretty much everybody's in the pool right now. We're at all-time highs. When everybody starts jumping out of the pool it's going to probably drop and drop significantly. Now, like I've said, there's the prices that we see. There's probably only 10% of that money if everybody wants out of the pool. The other 90% of it is hype, and that's kind of the way it goes. So, all right, moving on. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Just because I said something in the past and it came true, doesn't mean I'll get another one right, ever, again. This presentation here, intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything at all. Don't buy stuff from me. Don't buy stuff from other gurus. Don't buy stuff at all. Don't even trade. Don't buy stocks. Don't buy options. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. All trading involves a substantial risk of loss. And if you desire that personal financial advice, you need to hire and consult a financial advisor. There's a fiduciary duty to take care of you. And make sure you trust them too, just like me. If you trust me, I have a link down below. Click the more button. You come join me and go deeper. But if you don't trust me, just keep hanging out. Click the subscribe button. Click the bell with the notifications. Come back and we'll see if we can build some trust together. I happen to get some things right. And Goose was like, quit with the getting lucky crap. Well, what'd you say? Yesterday? Said that to me. Maybe it's 2 days ago. And, well, I do get lucky. I mean, I don't get them all right. I don't. Sometimes I don't buy enough time, like Elf Beauty. And that one really chaps my rear a little bit. We had the jobs report coming out this morning. Seeing positive number here. Unemployment rate down, up, excuse me, up. Little blip, but, really we're well below the resting heart rate over here. I think it's all manufactured at this point. It's like I was talking about last week, when you got people early retiring and jumping out of the pool. Yeah, it's all artificial lower, and we're probably going to see an accelerated rate of retirees. And it's not even about U6. It's just manufactured. Like we're missing a ton of people. And really, when you look at the real numbers, we've had losses in natural-born U.S. citizen jobs. All the jobs that have been created since back here have all of these jobs created have all been for foreign-born workers, not for actual U.S.-born workers. Now, is that good or bad? I don't know. Maybe it's the fact that we don't want to do the jobs that there's some sort of opinion I've seen that people just don't want to work. I should just get paid and not have to do jack squat. So I see that attitude a lot. I don't understand it. I've seen it with people I work with. I've seen it, all around. We've had trouble filling positions, and this started, back here, way back here. I ran into that back here. People just don't show up to work. You can pay them. We were paying $15, $20 an hour. It's not worth it for me to show up today. I'm counting on you to be able to do the job, and so replace people with robot workers, and robots are coming. China controls the robot technology at this point. They have end-to-end robot technology. Elon Musk sees the writing on the wall, trying to produce his Optimus robot through Tesla, but we'll see. China way more advanced on manufacturing robots and the maintenance of the robots and the programming of the robots. The U.S. is behind in that technology. So as far as jobs go, I don't know. People want to keep deciding they're not going to work. We're in for a world of hurt. And people working from home just don't get it done either. Let's be honest. Most of us aren't self-motivators. I've seen it widespread. Most people are not self-motivators if they're not in an environment that helps them motivate. If they're in a home environment where they can just fart around, they're going to fart around. That's why, nobody cares about you more than you. That's why the action takers here, I'm kind of preaching to the crowd, I guess. Your action takers, you're taking an interest in your own self betterment by watching this, and otherwise, all the other millions of people not watching this right now, maybe they haven't found me, but maybe they don't care. I mean, let's be honest. So moving on, not much to see here this week. We do have the FOMC coming up later in the month. Next week, not the most sparky week again. Monday, pretty benign. Tuesday, we've got some CPI coming out, a little sparky. Wednesday, not much. Thursday, PPI. And Friday, Empire State, consumer sentiment. So not a lot. I mean, CPI, PPI, that can move the market, but lately it hadn't really been moving. I mean, they've been cooking the inflation numbers. So, I mean, I kind of think they need inflation to rise. So they've been inching it up a little bit. And is it the actual numbers? Or, I mean, when you take out all the things we spend money on, and then you say that's the inflation number, what the heck? I mean, take out food and energy, and that's inflation. Everything left is inflation. What? Food and energy? I don't know about you. I spend most of my money on food and energy. At least a large chunk of it. Seems like every day. Pay my electric bill. Fill my car up. Buy food for everybody. Feed my kids. I mean, that's a significant chunk of money. And saying it's not inflation, or it shouldn't count in inflation, that's just ridiculous. I mean, sure, it's a volatile number, but it's when there's no dip, it's just up, 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 up. I mean, it's just we're not going back down. Even if we bring inflation down to 2%, the higher prices are here to stay permanently. I'm pretty sure. All right, what's moving today? We've got the market popping a little bit. As I said yesterday, it looked like we were going to reach right up into those upper areas, and we have the contract rollover. So this messes with the numbers just a little bit. So I got to do a little charting magic here. Come back and do this thing. So if you want the March contract that we've been kind of rolling with the last few days, talking about the levels right here, ESH 2024. This does expire next week. It is done finito. Right there, there's your 5183 number. 5180. Right there. And that 5200 above that. We're 70% likely to go tag that. Looks like we're getting a little volatility coming into the open. Nice big fat pop. Now a retrace. See the 5 minute. We'll see. That looks like we may get the continuation higher. Let's see S&P. Yeah, looks like we want to pop that higher number there. 5180 there also. That's what we got cooking. Probably the bias for the day, but we'll come back to the bias for the day after we kind of dive through everything. So S5FI, man, it was ramping yesterday. We may go tag the top one more time. Make a lower high, then watch out. The S5TH, stocks above the 200-day, still a lower high. This has got me concerned. And as I speculated, we may actually see the stocks above the 20-day pop up here, possibly break out again before we roll hard. So why the futures? Because the futures trade 23.5. They're closed from 5 to 6 p.m. each day, and then they're closed from 5 p.m. on Friday until 6 p.m. on Sunday. They open on Sundays, so we actually only have one full day where we don't get any market action, and that's on Saturday. So that's why I watch the futures, because they open on Sunday night. I can be like, oh, what's going on? You know, how's everything shaping up for tomorrow? And each night I can watch the lower time frames and see what the price action is looking like overnight. Looks like strength for going higher. And in Q, same situation, same kind of pattern for popping one more higher high. Russell, this one's interesting. Right here, says it's just grinding this thing out in an ending diagonal thing, and we may actually see a pop and then a severe drop. Super cautious on this. This is probably the along with the S5FI and the TH and the TW, this one right here is probably the biggest red indicator light flashing that we've got a dangerous situation set up in the market. Right there. Oil continuing to churn, hanging out right on that breakout level. So aggravating. And now we've essentially created a resistance zone that we've got to break through above the resistance zone that we're just sitting on. That one could result in a drop also. It could. I'm not keen to the fact that we have tried once, twice, I guess once, twice, 3 times to break out and just continue failing to break out. That's just not my favorite. I'm going to put this right up here. Yeah, we haven't even gone up to the top of the channel thing we've made. I don't know. That's just hanging in the middle of this channel thing. Gold, on the other hand, look at that baby go. Ramping. Ramping it, baby. Yeah, so, Goose is focused on this tax proposal to tax stock buybacks at a much higher rate. And essentially, that's just going to turn the faucet off on stock buybacks. I mean, essentially, companies will, this is the arrogance and fallacy of government thinking is that, companies are dumping all this money into stock buybacks, so we need to tax that because they're avoiding tax by not claiming it as income, and yeah, because if you do the stock buybacks, it distributes the wealth to the shareholders and you don't pay tax on it. Then all those shareholders go and pay their tax when they make their money. But by taxing the stock buyback, now you're telling companies don't do stock buybacks. Like, that's not what we want you to do. It's like slapping your hand. Like, don't do that. You're going to pay a penalty. So what are they going to do? Something else. What? I don't know. There's it'll become very popular, and we'll find out what it is after they start doing it. And we're talking about tons of money, tons and tons of money. And do they shift back to dividends? It'll be whatever is the lowest taxed way. This is what people do. I mean, this is you pay accountants and lawyers and everybody a lot of money if you're a big company to find these loopholes and know these loopholes. And that, that's how you optimize. We're always optimizing for the most amount of money, and that's what all these companies are doing. And paying the government is not optimizing the most return to you and your investors. So that's, it's the fallacy that, we can just go get more money. No, you're not going to get more money. Bitcoin showing strength for the last 3 days, and looks like we may get a pop. 72,900 is the next upside. Right there. 4,000 on Ethereum. Keeps ramping. We're right at the target. Next target up, 42.30. Dollar keeps dropping. We're down below the box, down below the resistance, or the support, down below the support, and probably on a pathway to... Now, we're not 70% likely to get there. We still have one last area that we got to get through to set this up. And, oh, I don't even have my fib right. Got to go that high. Save it. Yeah, so we're right in the zone. Got to get below this, and then we're 70% likely to do an extension lower, at least to 99.5, if not on down to the mid 90s. Now, what's popping and dropping today? Let me grab the most current list to make sure. SMCI. Right up to the target. Next target up, 1300. One of these days, this thing's gonna roll. Not today. Like I said, though, if you can afford it, $800 puts all the way out as far as you can buy them. One of these days, we're going to come back, and it's going to be vicious. NVIDIA, it's going for it, man. Is it going for the target? Looks like it. I bet we find resistance at 1,000. But that 1250, I mean, if we get through 1,000, what's another 250 to make it the largest company in the world? And then that's eerily similar to the story we've seen play out over and over. Cisco, XOM, GE briefly become the largest company in the world, and they get slammed because they didn't they went there fast. They didn't go there slow. There's no reason this should be hyped up to the biggest company in the world. There's just no good reason. No good reason. BIIB. Looks like a slow march back to this 200 area. FNGU. Not today, but it's going to break down and come back to the roadmap line. Roadmap line is being super slow loading. There it goes. One of these days, we're going to break down. And this is a leveraged ETN, exchange traded note. If you don't know the difference, go read the prospectus and compare it against a ETF, exchange traded fund. Basically, it has a duration and it has an end. All right. LABU, just chopping around, probably on the way to 220, but we may go retrace and retest. We may do this first before we do that. And we may set a lower target in here somewhere along the way. That's kind of what, we're either going to rip off now or we're going to retrace and rip off. That's the pattern. But leverage things, as I've said a majillion times, leverage things do not always follow my pattern. CVNA, well, it's popping. Complete garbage company, but hey. Lose a ton of money, report crap earnings, and go ripping off higher. Makes complete sense. Docu. Oh. Been bullish on this one. My target's up here, 68. This is a measured bounce and a roadmap line bounce, all kind of set up together. One of my power setups. Probably going to issue this as the chart of the week today. Nice. Basically retrace that gap. Sets us up to go higher if we get a close up here. That's the conservative entry. At this point, it's going to need to be higher than the open today. IoT popped up, hit the extension target. One of these days, we're going to retrace back to the roadmap line. TSM going full exponential. Broke out through the prior highs. Time to rock and roll. 168. 198 above that. USD. Wow. Full crazy. How high do these go before they top out? Your guess is as good as mine. at this point, we're way beyond any of my normal extension targets, and we're definitely onto this baby. Now, you may be like, JT, what are you talking about? Like, look. Not what I wanted to do. Focus on the white chart. See the white chart? Slamming it higher. That looks like a lot of the charts out there. A lot of those charts out there. No, I don't want to join. Come on. And we're just talking about this right here. Look at that ramp. It's a lot like that chart on the white chart. Not the seasonality chart I was covering it up with. FSLR. Chopping at the roadmap line. If we could break through and get higher than here, maybe, just maybe it could go higher. But right now, not looking so hot. EMPH, still stuck in the zone. If we can get broken out above this, probably going up here. There's the targets, 176, 199. But if we break back down below the roadmap line, certainly below this support box, heading on down. But right now, we're actually set up 70% likely to get at least an extension to 153. 70% odds we get to 153. Not too bad, not too bad at all. DPST just churning here. Remember that banking problem not resolved, but that doesn't mean we won't pop. This did come down three-way fashion. This may result in an extension that high, this low. We could go visit like 121. We tag that downside target, the next upside target, right up here around 121. Salah, Tesla. Maybe that was the low, but I'm feeling like we may ease on down to this next level. 167, next level down. 158, 160-ish. Just below that. SMH. Once you pop, you can't stop until you do. And then it comes back down vicious. That's another semiconductor ETF. Seeing a lot of those just popping off. USD is another semiconductor. This is a leveraged semiconductor ETF. SOXX, another semiconductor ETF. SOXL, another leveraged semiconductor ETF. So if that's your bag, go play. I am off of all of those right now as hot stove dangerous. GE, look at that. Doing the same exponential crazy bullshit. 185, 190, probably that target area right up here. If you're chasing it, or if you're on it, consider booking and or protecting the profit once we get up there. IWM, like I said, probably going to pop that one. And when I was talking about Russell, that's a cautionary price right there, 209. We could go to 215. Gosh, this looks so bad. We may drop back to this 190 area, rally at 618, and then it could flush, and we could be looking at like 130. Yeah, we could be looking at 130 on the downside. Bitcoin, there it goes, breaking higher. Pushing on up, pushing on up, pushing on up. You may be like, JT, why aren't the miners participating? Well, guess what? Miners aren't Bitcoin, just like gold miners aren't gold, but that's participating a little bit. Now, what we may see is once we cross 70,000, these things may come to life very suddenly. Very, very suddenly. All these miners that have just been sitting here languishing may all of a sudden come to life. We're seeing a lot of shorts get closed. The short interest has just plummeted on all of these. Something's cooking. Be careful out there. Yeah, clean spark. Nice run there. KOLD, natural gas ultra short, ramping again. NG1 exclamation point is, looks like it's gonna drop again. Yeah, look at the forward curve based on the futures for 25 to 30, 35. Right now we're just pricing in, hovering around $3 to $4. And right now we're hanging at $1.79. BX. Blackstone. Hovering. It's a, looks like it wants to go touch the roadmap line. Costco getting slammed. Apparently retail haves and have nots. Surprise. Miss on the bottom number. Might be time to come back to the roadmap line. That was one wicked move, way up past the watermelon seed squeeze targets. I mean, way on up. The target was like 737, and we went to 777 or so. And might be time to retrace that a bit. Maybe like, there's no way. I mean, look, right there, big ramp. And then did nothing for like almost a year and a half. Then it ramped again. Be careful. We've seen Costco do this. Done it before. Can do it again. Big ramp and then nothing. And little ramp and pull back. Big ramp and nothing. So watch out. Be careful. MDB. Looks like we fully tested the roadmap line now. Beautiful. This is fully cooked the pattern. Potential if we break out over 461, 543, 588 on the upside. AMXL, pharmaceutical. And this is why I don't trade stuff in the biotech, medtech space. I bet you some sort of FDA drug trial failure thing, and it got shot out of the sky. WSM. Yeah, retail haves and have nots. Go Williams-Sonoma. You ever tried their jalapeno honey butter? 257, 299 on the upside. Right there. RDNT. Looks like that one's going on up. Radnet. Nursing. Right up to the 54. Next upside on that one. And that is in the medical space, so be careful as usual. MRVL. Yeah, if we break that high, we're probably going on up. And Marvel, chips not superheroes. 109. Be the breakout target right up here. These were decliners, but now they're all ramping, so. America's Car Mart. That's a horrible chart. Don't even mess with that. NVO popped out. I would expect some retrace, maybe retest the box if we're going to hold it. Can go much higher, but if we break back down, we're probably coming down here. PBR, my apparently trading view is slowing down, not producing the results. Oh, below the roadmap line. Watch out for a deeper retrace on that one. Gotta go 2-point tool, low to high. We could retrace down to this area before we find support. Could find support at that prior low, but if it's looking weak, it may come all the way back down that 1250 area. All right, that's the list for the day. Bias. Oh, look at that. S&P already hitting the 5180. Holy bajoli. Holy guacamole. Holy guacamole. There it is. 5,200, next target up. We may go do that. There you go. Be careful. We're getting near the top. Like these last few squiggles, there. You don't know which squiggle is the last squiggle. We're getting close. I got a feeling. Could be next week. Could be 7 days from now. Could be the next Friday, and that'd be the top because that would make it essentially the same length of time. I'm gonna check this out before I wrap up with my last little tidbit of market statistic here. Let's go. Actually, I think I drew it on this chart. Look right here. Yeah. So look right here. This move right here. Ching, 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 ching. That move right there. If you move it off, look where it comes out right here. The length of time basically comes out right there around the 15th to 20th of March. Be the same length of time we went from March last year to July. Pulled back for 3 months. Started a rally. One of these epic rallies where we hadn't gotten a 2% pullback at all. Same length of time comes out right in there. Dun, 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 dun. We went up faster. Now, you may be like, okay, we went up faster and higher on this rally. So maybe this is an echo time-wise, not price move-wise. So be careful. Yeah, SWBI didn't make the list today. Didn't show up on the scanner in the pre-market. I use Market Chameleon pre-market movers. We can pop up SWBI, but it didn't move more than $2. That's why it didn't make the list. No, look, $3. Nice pop. It's my long-term play. Get targets way the frick up here. On the way. We'll see what happens. Anyway. All right. There you go. Be careful. Next week may be it. We may grind just a few more days. I don't know. Are we going to make an echo time-wise? That kind of scares me. That this rally here and this rally here become the same duration at the end of next week. We got 3 months of sucky pullback. Now, since we went up higher faster, does that mean the reaction is down further faster? That's what I'm thinking. That's what I'm thinking. So, thanks for watching, everybody. If anything I said was helpful, give me a thumbs up, give me a like, and I'll see you on Monday. If you want to come join me in Discord, where I'm hanging out the rest of the day, link is in the description down below. Click the more button and check it out. It's like $5.